Imagine dropping $20,000 into a single ETF and then watching it spit out cash for the rest of your life. No boss, no overtime, no second job, just passive income quietly landing in your brokerage account. That's exactly what I did with SCHD, the Schwab U.S. Dividend Equity ETF. But here's the million-dollar question. How much money does a $20,000 investment in SCHD actually pay in dividends? Is it worth tying up that kind of cash, or should you look elsewhere? Stick with me, because I'm going to reveal my actual numbers, break down how the dividends work, and show you exactly what kind of income you can expect from $20,000 in SCHD. Hey everyone, welcome back to the channel. If you're new here, we cover investing, building passive income, and creating long-term financial freedom, especially for US-based investors. Today's video is all about SCHD, one of the most popular dividend ETFs in America. I invested $20,000 into this fund, and I'll walk you through how much dividend income I'm making, why SCHD has exploded in popularity, and whether or not it deserves a spot in your portfolio. Section 1. What is SCHD? Quick refresher. So before we jump into the $20,000 breakdown, let's do a quick refresher. SCHD stands for Schwab U.S. Dividend Equity ETF. It's an exchange-traded fund that holds around 100 large U.S. companies that not only pay dividends, but also have strong financial health. Think Pepsi, Coca-Cola, Merck, Texas Instruments, Broadcom, and Home Depot. These are companies with long track records of rewarding shareholders. Now, what makes SCHD special? Solid dividend yield, historically around 3% to 3.5%. Dividend growth, the payouts have been increasing year after year. Low fees, just 0.06%. That means for every $10,000 invested, you're only paying $6 per year in fees. Quarterly payouts. SCHD pays dividends every 3 months like clockwork. It's one of those ETFs that's simple, reliable, and built for long-term investors. Section 2. My $20,000 investment. All right, let's get into the numbers you've been waiting for. I invested $20,000 into SCHD. At the time, SCHD was trading around $75 per share. That means I picked up about 266 shares. Now, with a dividend yield of roughly 3.5%, here's how the math works. Annual income equals $20,000 times 3.5% equals $700 per year. Quarterly income equals $700 divided by 4 equals $175 every 3 months. Monthly average equals $700 divided by 12 equals around $58 per month. So just by holding $20,000 in SCHD, I'm getting about $175 per quarter in dividends. That's $58 a month on average in passive income. Section 3. The reality of monthly dividends. Now, here's an important detail. SCHD doesn't actually pay you every single month. It pays 4 times a year, in March, June, September, and December. So technically, I don't see $58 hitting my account every month. Instead, I see $175 land in one shot every quarter. But a lot of investors like to average it out, just to visualize what it would feel like as a monthly income stream. Now, $58 per month isn't life-changing money. It's not paying the mortgage, but it's a phone bill. It's a couple of streaming subscriptions. It's a weekly grocery run. And remember, this is passive. I don't clock in, I don't do side hustles for this. I just own SCHD, and the money shows up. Section 4. Scaling the numbers. Here's where it gets fun. Let's scale this up. With $20,000 in SCHD, about $700 per year in dividends. If you invested $50,000, that jumps to around $1,750 per year, about $145 a month. With $100,000, you're looking at $3,500 per year, nearly $290 a month. At $500,000, SCHD could pay you around $17,500 per year, about $1,450 a month. And with a full $1 million in SCHD, you'd be collecting roughly $35,000 per year. That's $2,900 a month. That's retirement-level income. That's financial freedom. This is the power of dividend investing. It's not flashy, but it's reliable, and it grows over time. Section 5. Why SCHD is popular in the US. So why did I choose SCHD for this $20,000 investment? Dividend growth track record. SCHD isn't just paying dividends. It's been increasing those payouts over the years. U.S. investors love this because it protects against inflation. Strong companies. It only holds financially solid companies with a history of rewarding shareholders. Low costs. The expense ratio of 0.06% is basically free compared to mutual funds that might charge 1%. Tax benefits. Most SCHD dividends qualify for favorable U.S. tax rates, meaning you keep more of your money. Simplicity. Instead of researching 100 different dividend stocks, SCHD does the work for you. That's why this ETF has exploded in popularity in the United States. It checks all the right boxes. Section 6. Risks and downsides. Of course, no investment is perfect. Let's talk about the risks of putting $20,000 into SCHD. Market risk. If the stock market tanks, SCHD will drop too. Your dividends might keep coming, but the value of your $20,000 investment could shrink in the short term. Dividends can be cut. While SCHD focuses on strong companies, dividends are never guaranteed. Recessions can force even the best companies to trim payouts. Quarterly payments. If you want steady monthly cash flow, SCHD might not be ideal since it only pays 4 times a year. Yield is moderate. At 3 to 3.5%, it's not the highest yield ETF. If you're chasing super high yields, you'll have to look elsewhere, though that usually comes with more risk. Knowing these risks helps you stay realistic and avoid surprises. Section 7. The long-term power of $20,000. Now let's talk about why $20,000 in SCHD today could mean way more tomorrow. Reinvesting dividends. If I reinvest my $175 quarterly payouts, I'm buying more SCHD shares every 3 months. Over time, those extra shares start generating their own dividends, compounding growth. Dividend growth. SCHD has a history of increasing its payouts. If dividends continue to grow, my $700 a year could turn into $800, $900, or even more in the future without me adding another dime. Portfolio foundation. $20,000 in SCHD may not feel like much, but it's a strong building block. Add more over time. Let compounding do its thing, and you're setting yourself up for serious passive income down the road. It's not about what $20,000 is paying me today. It's about what it can grow into over the next 10, 20, or 30 years. Section 8. Is $20,000 in SCHD worth it? So is SCHD worth it? For me, yes. My $20,000 investment is generating around $700 a year, about $58 a month in passive income. That's real money, and it's money that grows with time. It's not flashy, but it's reliable. And reliability is what builds wealth over decades. I see SCHD as one of those sleep well at night investments. It's not going to double your money in a year, but it can quietly build a passive income stream that you can count. To wrap this up, I invested $20,000 in SCHD, and it's paying me about $700 per year in dividends, which averages out to $58 per month. It's not about the short-term numbers. It's about building a portfolio that works for you in the long run. So now I want to hear from you. Would you put $20,000 in SCHD? Or do you prefer other dividend ETFs like VYM, DVY, or even monthly payers like JEPI? Drop your answer in the comments below. If you found this video helpful, hit that like button, subscribe for more dividend investing content, and share this video with someone who's thinking about building passive income. Thanks for watching, and I'll see you in the next one.